Hello, travelers. Today we're diving into an exciting topic that many of you have been asking about. Where can you find affordable investment properties that offer a low entry point and promise profitable returns? After extensive research and considering factors like economic stability, growth potential, and affordability, we've compiled a list of the top 10 countries where your real estate dreams might become a reality. Starting our list at number 10 in Portugal. Portugal is becoming a go-to destination for investors and people looking to move abroad. It's not just the rich culture, stunning views, or great weather that's pulling people in. Portugal's city vibes and peaceful countryside living catch everyone's eye. And if you're thinking about buying a place there, I've got the lowdown for you. In cities like Lisbon, Porto, and Faro, prices can swing a lot depending on where exactly you're looking, the state of the property, and the demand. For instance, in Lisbon's heart, you're looking at around 3,000 to 6,000 euros per square meter. Porto's a bit easier on the wallet, with prices ranging from 2,000 to 4,500 euros per square meter. But if you venture out to the smaller towns or villages, that's where you find the real deals. Prices can dip as low as 1,000 euros per square meter, making it tempting to grab a spot away from the hustle and bustle. If you're from the EU, buying property here is pretty straightforward. You'll need a Portuguese fiscal number, known as a NIF, and that's about it. For those outside the EU, you'll also need a NIF, plus a local bank account. This Golden Visa program could be your ticket to living in Europe if you invest a good chunk into your property. The buying process involves getting that NIF, opening a bank account, signing a preliminary contract, and sealing the deal with a notary. Don't forget the extra costs, like taxes and fees, which can add up to about 7% to 10% of the property price. So, are you considering moving to or investing in Portugal? It's worth considering, especially with potential perks like residency. Just remember, the market's always changing, so chatting with a local expert is a smart move to ensure you're getting the best advice for your situation. Mexico. Mexico is becoming a hotspot for investors and those dreaming of a new life abroad. It's not just the sunny weather, amazing culture, or the stunning variety of places you can call home, from vibrant cities to peaceful beaches and charming colonial towns. Let's break down what it costs and what you need to know to buy property here. In big cities like Mexico City, Guadalajara, and Monterrey, property prices can swing a lot depending on where you're looking. In the hottest parts of Mexico City, you might see prices ranging from $2,000 to $4,000 per square meter. But step away from the center or look into luxury spots. Those numbers can change. If beach life is calling you, places like Cancun, Playa del Carmen, and Puerto Vallarta have much to offer. Prices here start around $1,500 per square meter, but can jump higher the closer you get to the water. And if you're looking for a real bargain, smaller towns and off-the-beaten-path spots can dip below $1,000 per square meter. So, what do you need to buy a place in Mexico? For foreigners eyeing property close to the coast or the border, there's this thing called a fideicomiso. It's a bank trust that lets you hold onto property indirectly, getting around the laws that usually stop foreign direct ownership in these areas. But if you're looking elsewhere, you can own property outright in your name. Obtaining a resident temporal visa. While not strictly necessary for the purchase, having this visa can make the process smoother and is required for some aspects of property ownership, such as signing up for certain utilities. Using a notary public. In Mexico, a notary public, notario publico, plays a crucial role in the real estate transaction, ensuring legality, collecting taxes, and registering the property. Choosing a reputable notary is a key step in the process. For properties in restricted zones, a fideicomiso through a Mexican bank is necessary. This trust is typically granted for 50 years and renewable at any time. Once all paperwork and payments are in order, the deed is signed in the notary public's presence, transferring ownership. Buyers should budget for additional costs, including the acquisition tax, around 2% to 4% of the property value, notary fees, and the cost of setting up and maintaining a fideicomiso if buying in a restricted zone. These can add approximately 5% to 10% to the total cost of the purchase. Turkey. Turkey's real estate scene is catching the eyes of investors worldwide. With its unique spot bridging Europe and Asia, bustling cities, stunning coastlines, and affordable living, Turkey's got a lot to offer. Whether you're eyeing a city pad in Istanbul or a beach retreat in Antalya, here's what you need to know about costs and how to purchase. In places like Istanbul, property prices can swing from $1,000 to $2,500 per square meter, depending on how plush the area is. But if you wander off to the coastal spots like Antalya or Bodrum, prices cool down to around $800 per square meter, and there's good money to be made in rentals during peak tourist times. For those not from Turkey, Buying property here is pretty straightforward. The country rolls out the red carpet with incentives like the Citizenship by Investment program. Here's a quick rundown of the steps. First, snag a Turkish tax number with just your passport at a local tax office. While you're at it, opening a bank account here makes the whole money side of things a lot smoother. Next, pick your property and do your homework to ensure there are no hidden surprises. A local real estate lawyer can be a big help here. You'll sign a sales contract and put down a deposit, typically about 10% to 30% of the price. Don't forget to get a valuation report to confirm you're paying a fair price. The home stretch involves applying for a title deed transfer at the Land Registry Office, where you'll settle any remaining balance and officially become the property owner. Keep in mind that buying here comes with extra costs, like a title deed fee and a valuation report fee, which add up to about 6% to 8% of the property's value. And for those looking to make Turkey their new home, investing at least $400,000 in real estate can open the door to Turkish citizenship, as long as you hold onto your property for 3 years. Philippines. The Philippines real estate market has attracted investors with its strong economic growth, vibrant culture, and breathtaking views. Whether you're dreaming of a high-rise condo in Metro Manila or a beachfront getaway in Cebu or Palawan, let's break down what you need to know about costs and how to make it happen. In the heart of Metro Manila, including spots like Makati, BGC, and Quezon City, condo prices can range widely. We're talking about $2,000 to $5,000 per square meter. And if you're looking at luxury spots, expect to pay on the higher end. But if you venture out to places like Cebu, Davao, or even more laid-back coastal areas, the price tag becomes much friendlier. Starting at around $1,000 per square meter, you might find something awesome, which is great for anyone thinking about residential living or tapping into the Philippines' booming tourism with a rental investment. For my fellow foreigners, here's the deal. You can't own land outright, but you can own up to 40% of a condominium project, which is pretty cool. Once you've picked a place, you'll sign a reservation agreement and pay a fee to hold it. This fee goes toward your purchase, but heads up, it's usually non-refundable. Next, you'll sign a sales contract outlining all the purchase details, including how you'll pay if you choose the installment option. You can pay in cash, through bank or developer financing. Just know you must have everything paid up before officially taking ownership. If you're buying pre-selling, meaning the building's not finished yet, you'll get the title once everything's built and your unit's ready. For already built properties, you'll handle the title transfer and registration with the local registry of deeds right after you pay in full. Remember the extra fees, like documentary stamp tax, transfer tax, and notarial fees, which can add up to about 3% to 6% of your property's value. A quick tip: doing your homework is key. Ensure the developer or seller is legitimate and the property has no issues. Investing in the Philippines can be a smart move with the potential for both capital growth and rental income, especially in the hotspots. But like any investment, it pays to plan carefully and get the right advice. Thailand. Thailand continues to attract investors from all corners of the globe. With its breathtaking landscapes, rich culture, and dynamic cities, Thailand offers a kaleidoscope of real estate opportunities. Whether you dream of a luxury condo in bustling Bangkok or a peaceful beachfront villa in Phuket, let's dive into what you need to know about the costs and how to get started. In the heart of Bangkok, property prices span a broad spectrum. You could be looking at anywhere from $2,500 to $7,000 per square meter for a condo, especially if you're eyeing those prime locations or swanky new developments. But the scene changes if you step outside the city buzz or head to coastal gems like Chiang Mai, Pattaya, Phuket, or Koh Samui. Chiang Mai offers more wallet-friendly options, starting at about $1,000 per square meter. While coastal spots vary in price, they all promise good rental income, thanks to Thailand's thriving tourism. Now, for my international friends, here's the scoop. Buying land is off the table, but owning a condo? Totally doable, as long as 51% of the building is Thai-owned. Once you've set your heart on a property, you'll sign a reservation agreement and pay a deposit. This deposit usually goes towards your down payment. Next, you'll sign the SPA, Sales and Purchase Agreement, which lays out all the sale details, including how you'll pay. This is when a large chunk of the payment is typically due. The grand finale is at the land department, where you'll pay any remaining balance and officially take ownership. Don't forget to add the additional costs, like transfer fees, stamp duty, and possibly a withholding tax, which add up to about 6% to 10% of the property's value. Brazil. The vibrant world of Brazilian real estate is a market as diverse and captivating as the country itself. From the energetic streets of São Paulo to the breathtaking beaches of Rio and the historical allure of Salvador, Brazil's got something for every investor. In city hearts like Sao Paulo and Rio, apartment prices in central areas can swing from $2,000 to $4,000 per square meter. Eyeing something more luxurious or right on the beach? Expect to pay top dollar for those prime spots. But venture out from these urban centers or into quieter coastal towns, and you'll find more bang for your buck. Prices can dip to as low as $1,000 per square meter, offering fantastic value and the chance to tap into Brazil's booming tourism market for some rental income. Kick things off by getting a CPF number, Brazil's tax ID, which you can snag at Brazilian consulates or within the country. Finding a trustworthy real estate agent who knows how to deal with foreign buyers will be your best ally in finding that dream property. Once chosen, you'll sign a purchase agreement and pay a deposit, usually about 10% to 20% of the price. The final step is making that last payment and getting everything official with a public deed at a notary's office. Then, register the deed at the local property registry to officially call it yours. Remember the additional costs, like the transfer tax, ITBI, notary, and registration fees, which can add up to about 3% to 6% of the property value. Investing in Brazil can be smart, offering the chance for both capital growth and a steady stream of rental income, especially if you're eyeing those tourist hotspots or bustling city locales. Remember, the market here can be as unpredictable as a Brazilian soap opera, so staying informed and getting the right local advice is crucial. Romania. With its rich history, diverse landscapes, and rapidly growing economy, Romania offers intriguing opportunities for real estate investors. The country's integration into the European Union and continuous development have made cities like Bucharest, Cluj-Napoca, and Brasov hotspots for both residential and commercial investments. The real estate market in Romania offers a wide range of prices, but generally, it's considered affordable compared to Western European standards. In major cities like Bucharest, the average price per square meter for an apartment in the city center can range from approximately 1,200 to 2,500 euros. Cluj-Napoca, known for its tech industry and student population, can see similar or slightly higher prices due to its growing demand. Prices are significantly lower outside the city centers and in smaller towns or rural areas. In these locations, the cost per square meter can start from as low as 700 euros, offering excellent opportunities for investors looking for larger properties or those with renovation in mind to increase value. EU citizens have the same rights as Romanian citizens regarding property ownership, meaning they can buy land and properties directly. Non-EU citizens can purchase buildings without restrictions, but may need to set up a Romanian company to buy land, including residential land. The first step involves verifying the legal status of the property, ensuring there are no legal encumbrances, and that the seller has the right to sell. This process typically involves a lawyer or a notary. A preliminary contract is signed once the property is chosen, and a deposit, usually 10% of the purchase price, is paid. This contract outlines the terms of the sale and the completion date. The final sale contract is signed before a notary, who also authenticates the document. The remaining balance is paid, and the property ownership is transferred. The new owner must register the property with the land registry to complete the process and legally record the change of ownership. Buyers should account for additional costs, including a notary fee, which varies based on the property price, but is generally around 0.5% to 1% of the property value. A property transfer tax, which is 2% to 3% for properties valued under 100,000 euros and 1% for properties above this value, and registration fees. The total cost of taxes and fees can range from approximately 3% to 6% of the property value. Romania's real estate market offers growth potential, especially in urban and developing areas. However, investors should be aware of the importance of thorough due diligence, particularly regarding property rights and legal status. Colombia. Colombia is quickly becoming a favorite among real estate investors. Its breathtaking landscapes, rich culture, and bustling cities like Medellin, Bogota, and Cartagena are on the rise. Its improving security and economic growth make it an even more attractive spot for snagging property, whether looking at residential or commercial investments. In the heart of cities like Bogota and Medellin, apartment prices range from $1,000 to $2,500 per square meter. Cartagena, with its historic charm and beachfront allure, can attract higher prices thanks to its appeal to tourists and expats alike. But if you venture out into smaller cities or the countryside, you'll find real value. Prices can drop to as low as $600 per square meter, offering fantastic opportunities for investors in potential growth areas. Foreigners have the same property rights as locals, making this market pretty accessible. Start by thoroughly investigating the property's legal status to prevent surprises. Once you find your dream property, you'll sign a promissory sale agreement with the seller, which lays out the sale terms and usually includes a deposit. The final sale happens before a notary, where you pay the balance and sign the public deed. This deed is then registered with the local land registry office, officially making you the owner. Additional costs, like notary fees, registration fees, and a property transfer tax, can add up to about 3% to 6% of the property value. Colombia's real estate scene is ripe with opportunities for growth and rental income, especially in its vibrant cities and sought-after tourist spots. But navigating this market does require some local know-how. Teaming up with a reputable real estate agent and a knowledgeable lawyer is key to securing your investment. Greece. Greece isn't just a postcard-perfect destination. It's a treasure trove of investment opportunities waiting to be discovered, from the sun-kissed islands to its city's ancient cobblestone streets. Prices vary greatly in city centers like Athens, Thessaloniki, and Patras. An apartment in central Athens costs around 1,500 to 3,000 euros per square meter. But if you're looking for something in a prime location or with historical charm, expect to pay more. The Greek islands, places like Mykonos, Santorini, and Crete, are where things get interesting. These spots are in high demand, with prices ranging from 2,000 to 10,000 euros per square meter for those sea views or beach proximity. But don't worry, some more affordable gems are hidden away on less touristy islands. Greece is welcoming to those outside the EU. You can buy property here with minimal fuss, though there are a few hoops to jump through if you're looking near the borders. To avoid surprises, start by thoroughly investigating the property's legal standing. This usually involves hiring a lawyer. Get a tax number, AFM. You'll need a Greek tax ID to proceed, which also applies to foreigners. Open a Greek bank account. This smoother the whole money transfer and tax payment process. Next, you'll sign a preliminary agreement and pay a deposit, locking in the terms of the sale. The big moment happens before a notary, where you sign the final contract, pay up, and register everything with the local land registry. Remember the extra costs, including the property transfer tax, notary, and legal fees, which can add up to about 5% to 14% of the property value. Greece's real estate isn't just about buying a property, it's about investing in a lifestyle, especially with incentives like the Golden Visa program for non-EU investors. Montenegro. For our #1 spot today, we're spotlighting Montenegro, the Adriatic Sea's hidden gem that's capturing the hearts of real estate investors globally. Known for its breathtaking landscapes, historic charm, and booming luxury tourism, Montenegro is quickly becoming a prime spot for those looking to dive into the European real estate market. On the stunning Montenegrin coast, places like Budva, Kotor, and Tivat are drawing in investors and tourists alike. Property prices can range from 2,000 to 4,000 euros per square meter, with premium spots in Porto Montenegro or Lustica Bay pushing even higher. The combination of sea views and luxury amenities is really turning heads. But don't overlook Podgorica and the inland areas, where the prices are more grounded, ranging from 1,000 to 2,000 euros per square meter. These spots offer a mix of residential and commercial opportunities and unique investments near natural beauties like Dermator National Park, albeit with a more seasonal appeal. For those from abroad looking to invest, Montenegro rolls out the welcome mat, offering the same property rights to non-residents as to locals. This open-door policy makes it a breeze for international buyers to get a piece of this Adriatic paradise. Start with a trusted real estate agent who knows the ins and outs of Montenegro's market. Don't skip the due diligence to ensure the property's title is clean and everything's in order. A local lawyer can be a lifesaver here. If you find the one you like, you'll sign a preliminary agreement and deposit, usually about 10% of the purchase price. The final step is a meeting with a notary public to sign the purchase contract and settle the remaining balance. The notary will then register your new property, officially transferring ownership. Remember, additional costs include a 3% real estate transfer tax and various notary and legal fees, typically adding up to about 4% to 5% of the property value. Montenegro's growing appeal, especially with its potential EU accession on the horizon, makes it an enticing market for those looking to invest in a lifestyle as much as in property. The straightforward purchase process and the country's openness to foreign investors add to its allure. That wraps up our global real estate journey from Montenegro's shores to Greece's ancient charm. Each destination holds unique prospects for savvy investors. Remember, success lies in research and local expertise. Like, subscribe, and share your thoughts below. Until next time.